All right, this is quick value 284 Axalta Coatings. AXTA is the ticker. This was a pretty popular name back in like 2015, 2017 timeframe. And, Merrill Whitmer pitched it in Barron's at one point. And just generally a liked stock, liked business. It's underperformed virtually every time period now. Shares are like 31 bucks right now. It came public in 2014 at around $20. This was at one point a division inside of DuPont. Carlyle bought it and then took it public like a year later. That's the backstory to this. It's a specialty chemical business. They make automotive paints, mostly for passenger vehicles, but they do some commercial and industrial stuff too. And the disclosures are pretty good. This is a pretty solid 10K, and the prospectus from when they came public, it's recent enough, right? I mean, almost 10 years, that there's some good info in there as well. So check it out. It's about a $7 billion market cap. So what makes this one interesting? I think it's a decent business. If you look at any of their capital market presentations, their market leading position in two of the segments that they're in, including the auto collision business, what they call refinish, and then they're number two in OEM light vehicle, and then they've got OEM commercial vehicle as well. They're a market leader in that, and then industrial coatings is a huge industry with tons of sub segments within it. So I don't know how they calculate this. They just kind of aggregated up number four player in that space. So all the capital markets presentations are pretty good. Here's what I like about this one. Well, starting with the fact that it's been a long time underperformer and the chart isn't abysmal. So it's not like a falling knife situation. Let's see if I can pull up a couple years here. Okay, so this is the 10-year view. And I feel like this doesn't do it justice. It's like flat, right? I mean, it's traded within a pretty tight range, ignoring COVID, pretty tight range around 30 bucks, plus or minus a couple bucks, right? And it's underperformed the market. So that's the backdrop. Flat-ish stock price, underperformed the market, mid-cap stock. And the fundamentals are actually pretty decent along the way. Let's see if I can zoom this in a tad for you. So let's start with this picture here. This is the fundamentals, right? So here's your revenue picture, EBITDA, margin, EPS, net debt, leverage, and share count. And for starters, revenue's slow growing, but it's growing, right? It's positive. Actually, I have by segment or by sales channel, really. The refinish business is like 40% of sales. Then you've got your industrial businesses, and then the light vehicle and commercial, that's all OEM, right? So OEM versus aftermarket are pretty different business lines. But think about it in those four sales channels. And each of these have grown at a decent clip. Now they've done some M&A along the way to get that, right? So let's see. This is when they came public, right? So ignore that time period there, right? This is when they came public. This is now the cash flow data. So they've done, what is this in aggregate? Almost $1.9 billion worth of acquisitions in 10 plus years. So yeah, that's helped contribute to revenue a decent amount. So revenue's up, your EBITDA is up over this time frame, although it went through a flattish period. This is where it starts to get interesting. EPS, after a long stretch of flat performance, right? 2014 to 2020 flattish, and even 2021 to 2023 was flat. Now you've got 3 years here of pretty solid growth. Okay, so that's first part of the fundamentals that are interesting. Net debt, forget the net debt. Let's just look at leverage. Leverage, check this out, right? This is 2014 to 2022, really in this like 3.5 to 4 times leverage range, right? A couple periods where they delevered in there, but never really crossing below the 3x mark. Now, 3 years of declining trends, and now this thing is 2.5 times levered, right? So just recently, they've gotten within their targeted leverage range, which is 2 to 2.5 times leverage. Share count is down during this time frame, but buyback consistency was definitely spotty. So that's the fundamental backdrop. So you've got a flat price over a long period of time, 10 years, right? And fundamentals have, at least in the last couple years, they're starting to get meaningfully better, meaningfully better. So what is happening to make that a reality? Well, it's a management change situation. So new management came in 2023, like mid-year. New CEO, new CFO, and not a COO, but like a division president. All three of them came from Meritor, MTOR, and that 3-person combo, they came in and I mean, really was kind of a quick fix. And then Meritor sold to Cummins at 36 and change. So from like $20 when they came in, 22, $23, and then sold the company like a year later. So that same team is now leading Axalta, and it's a pretty interesting, they're actually like doing stuff, right? So they came in and they laid out a 3-year plan. See if I can find that 3-year plan. Hang tight. There we go. Here it is, 3-year plan. So this was mid-24 that they launched this plan, and it was a 3-year plan, so 2024, 25, and 26. And targeting $5.7 billion in revenue, $1.2 billion in EBITDA, 2 to 2.5 times leverage, and $2.50 a share in EPS. Right, those were the targets. So now looking at 2025 guidance, let's see if we can find that. Hang on, here we go. 25 guidance, current outlook. So 5.2 billion, so not quite at that revenue number. EBITDA is not quite at the 1.2 billion, but it's close. EPS is at 250, so check that box, right? Free cash 475 to 500. They didn't guide on that, but that's fine. So they're within the leverage target. They have already achieved, by the end of 25, they will have achieved the EPS target. So revenue and EBITDA are the only places that they're falling short. So, I mean, I consider this a victory, right? Like, new management team came in, they're cleaning it up, they're actually getting it done. They have a year to go, and they're ahead of plan in many areas, the areas that matter, in my opinion. So, this is pretty fascinating. So I only listened to one transcript or one call, and that was this B of A Agriculture and Materials Conference. The CFO, Carl Anderson, was on this presentation, and this is a gold mine for what's going on in the story. Basically calling out like, oh yeah, there's been 5 CEOs since the company came public, and like nobody's been doing anything. They went through a process where they were close to selling the business to actually 2 competitors were looking at them, fell through, and then it's just been kind of like drifting since then. So these guys came in and they're just setting strategy and operations for the first time in what feels like 6 years, 7 years. So he laid out a case for all sorts of operational improvements, like they didn't have P&L autonomy. So one person at the company would own sales, and one person would own expenses, and one person would own this, and it's like they were in just constant conflict with each other. So there's that. They've underinvested in the plants, so like they're actually increasing CapEx guidance to try and get productivity improvements to drive earnings over the next few years. So really, really good presentation that just lays out the story. So that's the backdrop of where they're at. And to me, they laid out this plan, and they're sort of hitting the core metrics of it, which kind of builds some credibility for the management team. So yeah, I highlighted some of the comments that he made in that call that I just thought were really good, and the things that they're seeing. So the analyst made a comment. He's like, man, it sounds like you're just scratching the surface. And he's like, yeah, I agree with that. So I just find that sort of thing pretty fascinating, that there's maybe more to be done even going into 2026. And behind that, capital allocation was sort of all over the place historically. Big acquisition a couple times, then delever, inconsistent buybacks. And now they're getting a little more consistent, living within their means. Acquisitions are within free cash. Buybacks are medium sized but more consistent. So I think this is a well rounded capital allocation plan. And now that they're within their leverage target, it opens up possibilities beyond just nothing but delevering. So, barring any major acquisition, and levering up a ton, this company's set up to actually deploy like a meaningful amount of cash for the next couple of years. So, that's the backdrop. Flat stock chart for long time. New management team came in. All three of them had worked together and sold a company previously. Now they're running this 2/3 of the way into a 3-year plan, and it's going well, right? So the last piece of the puzzle is valuation. And you look at the peer group, and the peer group's tough because everybody has a slightly different business model. But I don't know, 14 to 15 times earnings, call it, 10 times EBITDA. And Axalta is trading at 12x earnings and 8x EBITDA with solid leverage and 20% EBITDA margins. So I would consider it toward or at the low end of their peer group from a valuation standpoint. I feel like that's kind of, they're left for dead, so to speak, since the failed sale process and the consistent management turnover. So it's not the cheapest stock I've ever seen. If you put a 14 or 15 times multiple on next year's EPS estimates, 273, only gets you to 38 to 40 bucks a share. So it's not the cheapest thing on the planet, but it's a solid business, right? Market leader in a bunch of industries, and yeah, the refinish business is struggling at the moment, and auto production's not necessarily killing it either. So there's some headwinds in certain areas, but it's got a nice self-help story and potentially a capital allocation inflection to boot. So I don't know. I don't own any shares, but I like it. I mean, it's a solid mid-cap idea in a market that looks relatively expensive. So I don't know. Take a look at my write-up. It's at valuedon'tlie.com, and let me know what you think, or if you've done any work on the idea. I'd love to hear if you've got some notes on it. This is Axalta, AXTA.